Hey guys, I want to talk about some stocks that are doing well and sort of how I look at the charts and stuff like that. So I won't get into the markets because they're doing all right as an overall index, but this one here, JMIA, what I look for in general is a break of like a pullback or a downtrend here. It's not a big pullback or downtrend, but also like confirmed with this crossover here with the momentum, the MACD, or what I use is the price percent oscillator crossing up. So you can see that you can get an increase without the momentum coming up here, but it's like a divergence in that sense. So you can see how it eventually did pull back. And so basically, you know, you can see already, obviously it's up 11%. So you'd want to get it like earlier when you have this break. You can see how it's starting to come up here. And you can see the stochastics are moving up too. So, but like there's a couple of entry points when you buy something, and what I like to do is get it near the 8 EMA down here, like near the trend. But if you draw a line like with this pullback, and you'd want to see like positive candles, like white up candles. So this would have been a good entry point. Even this one, you know, technically, but it's an IPO, it's an early stage, so there's not a lot of data here. But the other spot that people look at is a breakout like this. The thing I don't like as much is that you know, it's higher, it's quite a bit higher up off the 8 EMA moving average. So, but that does indicate a lot of strength. So you can see what happens in the next few days when you start to see an uptrend in something near the 8 EMA. That would be a lower risk entry, in my opinion. Skills is another one that's been pretty doing well. If you're using the volatility stops like I have, the red kind of indicates, you know, not a place to be buying, but a lot of times it will conflict with like the fact that the candle is above the 8 EMA. But if you're waiting for confirmation with the MACD crossover, then you'd be looking here would be a better spot to get in, where you have this crossover here. But it depends how early you want to get in. Like you start to see that these red bars are starting to decrease. That's the gap between the moving averages. And then you get the crossover. So this is more a strength position. This would be trying to see that you're, the other thing people look at is moving averages such as 21 EMA. This is the blue aqua here, and then you have the blue 50-day. So if the 8 EMA is near the 21, you might want to wait. So like instead of, you know, if you had your stop at this green dot, instead of letting that happen, you can use more of a mental stop and say, let's see what happens here. Like if it keeps blowing below the 21 EMA, you might get out, but you give it a chance to close here, see what happens the next day. And so you could stay in a bit longer. Like you see here how if you had a stop, this green one would have got stopped out right here, which is fine because you could have waited through forgot all this stuff. So it's not about like staying in, and it's not just about like losing a bit of money from here to where you bought back in. It's about the risk reward. And so, you know, if you avoided this, your money could be somewhere else during that period, and then you could deploy, you know, on this next phase. So you don't have to ride out this whole spot. So there's different philosophies in terms of like what you're going to do. So a little looser, if you bought in earlier and you could sort of see what happens. Like you'd have to be able to see it go below this 21 here and 21 here. But it ended up pushing back up. So if you're a bit patient that way and you have a bit of a cushion, you could definitely hold it through there. But the other options are let it trigger, stop here, and then get back in over here. Let's see what else we have. Chewy. So hopefully you're seeing a similar pattern here. You've got this cross here, and then I wait to see, you know, ideally the red volatility stop turns to green. It also coordinates with this cross here. So this would have been yesterday, a good entry point. Of course, if you decide to hold, like if you're down here or way earlier and you're holding, then you're riding the up and the down, and you're sort of seeing what happens at the 21 EMA. because these are fairly close to the 8 EMA. But if you decided to wait, you're looking at another 14% down to the 50-day. So that's quite a bit of a drop. So I probably wouldn't want to do that. But in other scenarios, you might be patient enough to wait for it to come back to the 50. But these are short-term, relatively short-term holds. So this would be a good entry. Peloton, same sort of thing. You've got that downtrend there, pullback, and you're starting to come up and cross back up again. So this is like the first day, which is an early entry point, but you know, you could get the reversal and it becomes a red dot at some point. But you know, that's an early, and you can see here with the derivative oscillator that you started to see, and you know that it was getting better a few days earlier. So once you had this right here, little doji on the 21 EMA, some people might decide to buy there and put a stop very close and see if it holds at the 21 EMA. That's something I might try. I'm not really doing that, but because I like to buy when I see strength, a green volatility, an up candle. Other people, as soon as it comes down to this 21, they buy. And it's a bit risky in my mind because it could keep going. But if they put a stop fairly close, that is an advantage. Of course, things don't always sit at the 21. You see here how it broke through and came back up and back down again. So I would usually sell when it triggered my stop here and skip all this red down period. And you can see the MACD is down. Once you have this cross, I would look up here while I still see red, and I would wait a bit longer. And then once I started to see in the good up candles and a break of the recent highs here, then I would get in right there somewhere. And then ride that out till it triggered stop here and then get back in. So you'd be out of this for like a week or so and then back in again. But like I said, if you want to hold and you have quite a good cushion, like if you bought it down here, or like I said earlier, you might decide to let it ride down through and see if it holds at the 21. Zoom is starting to see a bit of life, but of course it's done that a few times here. Still in this downtrend. The other problem is the 50 days coming down and it's below the 50. So I'd probably want to see a break up above the 50. If you want to put an alert, so I'm using TC2000. If you can get a free trial or a $25 off discount your purchase if you use the link in the description below, and that also helps out my channel. I'm using the gold plan and I've got US real-time data, and what you can do is go to some of these indicators here and you can click on that. So instead of trying to predict the price and oops, I turned off the 50. Hold on a sec. I changed the data source by mistake. Instead of clicking here, because it's going to change, like the value is going to change as the moving average keeps going. Instead of just, you know, putting on, right clicking and saying set alert on that price, what you can do, which is better, is say set an alert on the 50-day. So when you say, instead of greater than 0, you say when the price is crossing up, when the moving average, when the price is, you basically want the price to cross up over the moving average. So what you need to do is, hold on a sec here. What the fuck? You need to set the price history either crossing up or above the 50. So here, price history, let's say crossing up the 50, like that. And so then you have your alert. So because I'm looking at the crossover, you can see here, let's see if I can, you see there's a crossover right here. it's not always the perfect entry because you have to look at like the moving averages and trends and stuff. But if you want to search or if you want to filter an existing watch list, you can say, you know, it's crossing up, like this just says above, but this will filter the stocks that you see to make sure like that they're above, that this crossed up above the moving average here. So it's a way, and you can do this for a watch list. Like so TC2000 has US stocks, ETFs, Canadian stocks, stuff like that. So if you click on that, then the nice thing is you can filter, and I created conditions here for like a MACD or PPO crossover with also volume and price. And so now I'm only going to see stocks that are crossing, like Personalis. That's a good one in the in the genomics. You can see that it's come up and crossed again. So this would be, you know, you do this earlier in the day, but it's just about crossing right now. So this is a good, and this is also the first green volatility stop, which is a good entry point as well. Of course, there's a nearby resistance here. So if you get in here, you know, there's a chance it'll bounce off that resistance and come back down, or you can wait for it to break that resistance. You can set an alert up higher if you want to wait. But Chewy is the one I mentioned earlier. Moderna is, you see how it came up here quite a bit, it came back, and it's supported at the 50 now. So you can see that it's been coming up, and you'll see that with the stochastics in this MACD coming back up again. So this is like very close to a perfect entry point, in my opinion. Of course, I'm not, you know, giving you advice on when to buy because you have to manage the whole trade and everything. But if you're buying individual stocks, this would be an excellent place. So ideally, what you want to be doing is buying stocks like with the MACD crossing right here, ride this up, it triggers your stop loss here, all the red dots, declining MACD, and then you get another chance to enter again. So that's kind of the philosophy that I'm encouraging you guys. And you can also use it for ETFs, which, you know, move slower. But let me give you some examples. So if you look at cannabis, you had a recent cross here with the MACD. Of course, you could have held the whole time as long as it's above this 21 EMA. But like if you're using the 8 EMA, you're going to probably trigger your stops here. So you have to give it, you can give it a bit of room to breathe if you have some gains already. And this, I've got a watch list for various sectors. Instead of just the overall indices, I focus on looking at what sectors are starting to come up. So ARCG is the genomics, cannabis is huge, esports is like the video games and stuff. Online retail has just crossed up again. There's the tech is not, this one hasn't quite, this is Canadian ETF for tech, it hasn't quite crossed like Shopify. But solar is iClean, you can follow that above the 80 EMA or above the 21, so it's getting a bit high off the 21, but so this is nice. Gambling, so these are very smooth, generally nice uptrends, and you can see that when you get that MACD cross again, like here, is the potential for an entry point, and as long as you're above and moving up, it's looking good. You've got financial with ARC. Some things that are starting to come up, like utilities, have been down, but this is just below the 50, so I wouldn't necessarily buy right here. But you can see how it's had quite a bit of support, and there might be a push at some point for utilities. Real estate's been kind of down, but poking up a little bit, but you can see it's curling up a little bit here, but below the 50, which is not great. What else? Home construction has been kind of in a very flat situation, and not able to break above this resistance. You see how it came up today and poked back down. So because it's done this multiple times here, I'd like to see it break through that resistance. So I'm not going to get in on that one quite yet. All right, I think that's enough. Hopefully it gives you a sense of how I look at things in the charts and stuff. Like I said, if you want to get TC2000 software, which is this program, it's excellent. There's a link in the description below for a free trial or $25 off your purchase. Talk to you guys later.